What's up, guys? It's Ox Fibonacci, and I wanted to make a kind of follow-up video to the last one I made about how to consistently trade an edge and really deep dive into backtesting specifically. I know it's a new concept to a lot of us. I hadn't really heard about it until I'd read the book Trading in the Zone, so I really wanted to show you guys, actually demo some of the tools that I use for backtesting, as well as I also made a custom kind of Excel or Google sheet that you can use for more manual backtesting. So I want to show you guys kind of both of these things. So we've got intro. I'm going to talk to you guys kind of about the importance of backtesting. We're going to go over the kind of mechanical trading process, what that looks like, and what kind of variables you need to define for that. We're going to dive into some actual backtesting demos using my kind of favorite software, FX Replay, as well as the manual option I mentioned. And then I'm going to give you guys a bunch of different trading ideas that you can try using on your own for backtesting, or obviously you could spend the time to come up with your own. So with that, let's start with the importance of backtesting. So I always tell people, like, backtesting is essentially like practice for an athlete. Like, you never see any pro athletes who have never practiced. You obviously have to spend a lot of time like learning the fundamentals, how to dribble, how to shoot, the physical stuff. And with trading, it's obviously it's a different scenario, but it's the same kind of process, right? You're learning the fundamentals, you're trying to better identify like setups, you're building repetitions on looking at charts and kind of actually placing trades and things like that and seeing how they play out, basically like building up your pattern recognition. So it's just like overall practice. And with backtesting, one of the best benefits is it helps you know if you're actually trading a profitable strategy or not, which a lot of people, if they don't backtest, they kind of hope they are right more than they're wrong. But until you get the actual data from backtesting, however you're trading over a large enough sample size, you don't really know if it's actually profitable or not. So that's a big thing that backtesting helps with. And like I said, it helps to help build up the reps for identifying and executing setups, improves your pattern recognition. And maybe you start with kind of a broad idea that whenever this kind of pattern shows up, it generally goes one way or another. But maybe after you backtest a while, you identify like a little modifications, like, oh, it actually like also maybe also plays out with this other slight variation. So it helps you kind of make some modifications over time too. And there definitely is a difference between simply just like practicing technical analysis versus backtesting a mechanical strategy. And that's really what I want to kind of show you guys how, if you just are practicing TA and stuff, it's not the same benefit as actually like backtesting a mechanical strategy that's very specific, when to enter, when to exit. So I want to show you guys kind of more of this second piece, which I think is more important for building an edge over time. So the mechanical trading process, what is that specifically? So little overview from stuff I said in the last video, but to repeat, kind of emotional reactions and mistakes are really the main reason people lose money. Anything when you're closing a trade too early, maybe you put your stop loss to break even too soon, it hits it and then goes in your favor. It's definitely happened to me before. Sometimes if you don't hold the trade long enough until you take profit, you close it too early. Maybe you're hesitating to pull the trigger. You're not sure if you should take the trade or not. And obviously over leveraging is kind of one of the biggest mistakes that we've all made with trading. So basically, whenever you don't have a trading plan and proper risk management, like, you're always going to be reacting, because when it's going in your favor, you'll feel excitement. When it's going against you, even if you're already in profit, but it starts going against you, you will like start to feel physical fear. And so being in this reactive state really kind of turns off the logic side of the brain and makes you very reactive and prone to making these mistakes more often and more severely. So mechanical trading kind of solves a lot of that by basically making it so you have like no shadow of a doubt like when to enter, when to exit, whether that's for profit or loss. And it's based on this fixed, non-subjective kind of rule set that defines all of these. And obviously you have to practice it with backtesting to get better at actually like following through when the trade triggers happen. But it makes it where trading like it doesn't have to be emotional. Essentially, like all you're really doing is like looking at the chart, and if there's a trade trigger that lines up with your mechanical rule set, you take the trade. If not, you don't take any trades. Like, it's a very black and white and kind of robotic process to follow that makes trading a lot less emotional, which means you are less prone to make all these mistakes. So here are the kind of the variables you need to define for a mechanical edge. There's kind of like two kind of subgroups, I would say, in general. Obviously, you need to figure out what trading pairs you're trading. Are you trading, forex pairs or crypto or U.S. indices or gold or different metals? What time frame on the chart are you going to trade? So, are you looking at 15-minute or 1 hour, or maybe it's a combination of two time frames? You look for kind of a broad setup on a bigger time frame, and then you go down to a smaller time frame to look for the actual entry. Sometimes people do that. When will you look for the trades? So this is really important kind of on the outset. Before you start backtesting, you really need to think like, what time can I consistently trade? Because obviously if you're backtesting 2 a.m. trades and you're not going to be trading at that time, like, you're kind of wasting your time. So you need to figure out what specific times of the day and what days you can trade personally, and then that's the time that you really want to focus on backtesting so that your data is relevant to the time you're actually going to be trading. And then obviously, are you taking longs or shorts or both? And then execution specific. These are obviously a little more broad, I guess, but it's really like what variables need to be in place that tells you like, okay, this is when I need to enter. I call it like an entry trigger. And then also, like, after you enter, where should your take profit and stop loss be after the entry? And then finally, obviously, how much you want to risk per trade. I have some advice on that in the previous video. And then, are there multiple entry triggers? So, sometimes there's a trading strategy. I'll kind of just reference my kind of 15-minute pattern strategy. It's mostly like rising and falling wedges, and I identified there was like 3 or 4 different ways it could play out, and eventually it's kind of going the same direction. But in terms of the very specific kind of entry triggers, for me at least, I found like there were multiple ways that I could get an entry. So if you have multiple entry triggers, you need to define specific entries and exits for each way you enter, essentially. So with that, I want to show you guys some actual backtesting demos to show you guys how to do it. And first, I'll kind of mention FX Replay is really the #1 backtesting tool right now. They've got forex, traditional finance futures, about half a dozen crypto pairs, and I was actually able to get a discount with them. So if you use this link and this code Fibonacci, you can get 15% off. Might as well save yourself some money. And so I kind of came up with these. Honestly, like I just kind of made this strategy up and spent a couple hours playing around with it. But it's basically a fair value gap strategy in line with the trend, and I'll kind of show you guys what I mean with this, and show you guys how to actually like do a few trades in FX Replay. So it's Bitcoin. I decided I was going to trade this 8 a.m. to 1 p.m. Eastern, kind of core New York session. I'm looking at the 15-hour time frame. We're going to trade longs and shorts. Entry trigger. It was pretty simple. I'm just going to look for market structure trends. Are we an uptrend with higher lows, higher highs, or a downtrend with lower lows, lower highs? And I'm just looking for 15-minute fair value gaps, kind of on the pullbacks, and assuming the trend will continue. And for stop loss, I decided to use the body of the most recent lower high, and the take profit. You could do either the closest higher low that gives you at least 2R. So 1% risk per trade. So this is like the basic parameters, and then after I spent a little time doing this, I noticed that there was a couple other things I wanted to add. And this is again like after you do the try it out a little bit, you'll see a few inconsistencies, and you can maybe add a few other rules. But I noticed that you shouldn't really trade this if there's an unclear market structure or the market structure shift is needed to tag an entry. And I'll show you guys specifically what I mean with that. So I'm going to pivot over to FX Replay here, and first I want to kind of show you the dashboard. And when you initially go into FX Replay, there are a couple things you need to toggle. If you go to manage accounts and you go to customizations, obviously dark modes is what I prefer. You can kind of choose your poison there. But you definitely want to enable this replay function so that it'll allow you to kind of go backwards if you accidentally go too far in the chart. So that's kind of the first thing you want to do. And we'll go back to our dashboard, and how you kind of start a trading session. It's really simple. You click this create session. You can put in any account balance you want. Personally, I've kind of gotten the habit of doing 100,000 just so I know every $1,000 is kind of a 1% gain. You could do really any amount you want. You can choose what kind of pairs you want, and the only thing I'll kind of mention here is that, here's the few crypto pairs they have, and then if you're trading futures, make sure to use the actual future pairs like ES for the S&P or YM for the Dow, for example, or GC for gold, instead of just the CFD pairs, so you'll have a little more accurate data. And then you can pick really any start date and end date you want. Obviously, it has to be in the past. These FX Replay goes back years, so you can go back and identify, maybe when was there an uptrend year, when was there a downtrend year or month, when was there kind of a choppy ranging month. You can kind of look to test different market conditions and then kind of input those variables. You can kind of put a name to whatever strategy you're trading, and then whatever name you want to call the backtest. So I've already done this, and I said I'm gonna look. I think we looked at early 2018. I just called this 15-minute fair value gap retrace. And I started with 5 minutes, but 15 minutes is definitely more consistent. So yeah, I've already kind of set this up, and now I'm going to go in. So you click on it and hit continue, which I've already done in this tab. So before I get into the backtesting, again, a couple more kind of household items. If you have multiple backtests in here, you're going to definitely want to come up here to the top right and save out or make a copy and make a fresh template. Because these templates, and it's the same with TradingView, but basically whatever template you have up here saves all of your chart drawings. So it's really important to make sure you have a template for each of your backtest things so that you can keep all the different drawings that you want. And so you can either make a copy and then rename it or whatever you want. And then I guess I'm not using it in this example, but if you have a strategy where you want to look at multiple screens at once, they have kind of this layout thing. You can put two screens back to back or whatever you want. So with that, I guess indicators, the only thing I added on this one is this fair value gap indicator. And for those of you that aren't familiar, fair value gaps are basically just a little gap between candles, essentially. So you can see this, the top of this candle right here is lower than the bottom of the candle after. So this candle here at 23.45, it created this fair value gap, and you can see it by this kind of green area that it makes. So it's basically just a gap in price action. There was no overlapping wicks on either side of the candle, and often fair value gaps will act as support or resistance. So just a little education thing there. And then those couple of rules that I mentioned, I added. So we're not going to take any trades if there's an unclear market structure. So we really want to see very easy to see kind of, this is an uptrend, higher low, higher high, higher low, higher high, higher low. So we're coming back into a fair value gap with a very clear market structure. And contrast that to a couple other examples where maybe we have a nice higher high, higher low, higher high, higher low, but we have a lower high here. And so it kind of is breaking our clear market structure. So it's, if there was a fair value gap kind of below this, I wouldn't take this trade just because it's not the consistent and clear market structure. And similarly, kind of example here below, we've got an uptrend, and then we have a kind of lower low here and a higher high here. It's kind of unclear what the trend is. So we're only going to enter if we see very clear market structure. And similarly, we're not going to take any trades if market structure shift is required for an entry. So again, in a downtrend in this example, lower low, lower high, lower low, lower high, very simple, clear market structure. And in this other example, we have a kind of we'll call it a lower high here, but we have a fair value gap a little bit above it. And the only way we could tag this fair value gap is if we make a higher high. from this previous one. So this would be kind of what I mean by this rule. Like we can't break the market structure in order to get an entry. So just a couple of things that I've noticed that will kind of invalidate some of the rules. We basically won't take the trade. So I've already gone through this a little bit and kind of found the trade setups just to make this video a little more efficient. The one thing I will mention, you're going to use this kind of long short tool often. It's over here on the left, and sorry, not this one, right here. It's like just above the smiley face. There'll be like these long and short positions. And if you don't like a bunch of clutter, I guess, kind of on the right side of the chart, there's one thing you can pretty easily do is click on it and go into the settings, and you can basically toggle on and off these price labels, and it'll kind of clean up your chart a little bit. If you need the specific level for kind of writing it down, it's helpful, but otherwise I think it makes the chart cleaner if you turn it off. So kind of in this example, going back to our kind of rule set, we're trading from 8 a.m. to 1 Eastern. So we're at a little after 9 a.m. here, and there's a 15-minute, pretty clear uptrend, right? We've got a series of higher highs, higher lows, and we've got our nice fair value gap here. So as I'd mentioned in the rule set, I'm putting my stop loss under the body of the recent low. When this is the recent low, and then I adjusted the entry so that when I target this recent high, we'll get at least 2 to 1 risk to reward. And how you record the trade is you click on this long short tool, you click place order, and you can put in kind of whatever you want. I had mentioned I'm going to do 1% for this, and there's a bunch of other things you can do. Some people do this auto break even feature, whatever. And then I will mention this tags thing. So if you have a strategy that maybe there's 2 or 3 or multiple different potential entry triggers, you can add tags here, and then later when you're going through the analytics, it'll allow you to filter your data based on the different tags. So since we're only analyzing one trade entry here, just these fair value gap triggers, we're going to leave it as is. I guess I could say this is a long. We have a long or short, but I'm pretty sure their analytics do that anyway. So we'll go ahead and add that in there just so we have it. So that we got 1%, we've got a limit order, and then we're going to save. So you can see it adds the orders on the chart, our entry, our take profit, stop loss, and then you use this little kind of scroll wheel up top, and it will kind of let you, decide how fast or slow to go through the data. So we're on the 15-minute chart here, and there's kind of 2 ways to do it. You can either use this play function, it'll kind of play them automatically, and this will kind of toggle how fast or slow that goes, or you can use this kind of right click thing to just go 1 candle at a time, which is usually what I do. So if you click out, you can see a little better. So we're gonna go through here, you can see we got tagged in there, and we're just gonna let the trade play out. So now it's coming back up, and just let it play out. Okay, great. So this is a nice winning trade. So we're already at kind of the end of the day for this one, so that's really the only trade for this day. So the easy way to get to the next day is these go-to things appear, and you can customize these to kind of change whatever times you want relative to what you're testing. So I think I've already adjusted this, but I'm going to just go to next day open. It should take me to the next New York open. So we're at 8 a.m. Eastern, which is when we want to start. And I think I had mentioned here, we have unclear market structure. Let's do one more candle. Yes. So like I mentioned before, we want to see a nice series of, in this example, lower lows, lower highs, but we have a higher low here. So it's not really clear. I'm not going to trade off this fair value gap because there's an unclear market structure. But let's see. So now we have a kind of change in market structure. We have a higher low and a higher high. And I believe I took a trade right here. Okay, so we have a fair value gap retracement that is right here, and the recent low is right here. And so this one, the recent high right here was only like a 0.61 risk to reward, so that's why I needed to target like a higher recent high to get that at least 2 to 1 risk to reward. So I'll go ahead and click in here, place this order. Again, we're doing 1%. I'll say it's a long, and save. and then we'll play this one out. So we got tagged in, and nice win there. Hit our take profit. So yeah, we're just gonna do one trade a day. There could be a couple other examples, but we'll go to the next day. So again, this is another day that there was unclear market structure. So kind of as I'd mentioned, we got a lower low, lower high, higher low, lower high, lower, like it's just there's like no really clear market structure here. So just like why I didn't take any trades this day. It's kind of just like a choppy day, I guess. And so we'll just go to the next trade. Like some days there's not going to be trades, especially if you're trading 15-minute time frame and higher. I think most professional traders that I know only take like 3 to 8 trades a week, just for reference. So if you're doing a lot more than that, you might want to consider doing a higher time frame or something, just so it's not as you're not over trading as much. So nice uptrend here. So we're gonna see in this example, we got a nice high here and a low here. So we're coming up here and we've got some nice fair value gaps right here. And so again, my stop loss is at the body of the recent low. My entry is in this fair value gap retracement, and we're just targeting this recent high. We've got a 2.02 risk to reward. So we'll place this order. I'm gonna put long again, save, let it play out. And I'll show you kind of what it looks like if you do the kind of play feature instead. So if you just do this, it'll like just play the candles live. So either one works. This one was close to stopping us out. But good start. We've got 3 wins in a row, and let's go to the next day. So here we are on a Monday, and again, I've kind of mentioned we had unclear market structure. We've got a downtrend, but now we have a higher low, so I'm not really sure. I guess this one would have worked out. Like there was a fair value gap here that it would have worked out, but I'm sticking to the rules, and I wouldn't have taken this one just because it's a unclear market structure. So I think it just kind of went down the rest of the day. And I don't think there were any other trades that day. So let's go to the next day. All right. So here we have a downtrend and nice lower low, lower high, lower low. Like everything's looking pretty solid. We'll do a stop loss at the body of this recent high. Take profit. We're gonna do kind of this high because it gives us a 2-to-1 risk to reward, and we'll go ahead and place this order 1%, and this one's gonna be a short. So I'll put that tag in there. Save. And I believe this is a loss, so you'll see that not all these trades are wins. So yeah, we tagged our entry, and this one stopped us out. So this is a loss. So we've had, 3 wins and one loss so far. You're definitely going to have losses. It's just kind of part of the game. But the backtesting will kind of tell you what your win rate is over time. So go to the next day. All right. So we've got, let's see, unclear market structure. Yeah, so it's kind of hard to see, but we have a downtrend here. But then kind of on this move up, we've kind of got a series of higher highs and higher lows. So it's like a mini uptrend within the downtrend. So again, I probably wouldn't necessarily take this one just because it's not super easy to see the market structure. Yeah, because again, downtrend, but then we had a higher low here. So it's just, it's not the straightforward like lower low, lower high that we want to see. If they're, this is before we would have traded. But if this was during the time that we're trading and there was a fair value gap here, like we probably would have taken this one, and looks like it might have been a loss. But if we're starting at our 8:30 time frame, or 8 o'clock time frame, there wasn't anything really after this. So so no trades on this day. Go to the next day open. All right, so this one I think is one of the examples that market structure shift was needed, so I didn't take this trade, but I wanted to kind of show you guys what I meant. All right, so let's see right here. Okay, so we've got a nice little uptrend going, highs, higher lows, higher highs, higher lows, but this fair value gap down here that we needed for our entry, like in order to get the 2-to-1 risk to reward, like we needed an entry kind of down here. Now in order to tag this entry, we would need a lower low below this kind of low right here, and that would be a market structure shift, right? You would have, instead of the higher lows and higher highs, you'd have a lower low. And so because of that, we're not going to take this trade, and you'll kind of see in this example, we didn't take it, so we saved ourselves from a loss because it would have knocked us out. So didn't take this one because, yeah, it would have required a market structure shift for the entry. A few more examples. Okay, so actually this might be the last example. So we have, it's 8 o'clock now. We're kind of seeing what we've got here. And we have a lower high followed by now a lower low. And we had a nice fair value gap here. So this is a kind of tight trade, but so we'll take the body of the recent high. We'll target, I think I just did a simple 2R in this case because we didn't need to, target all the way down here. But we'll place the order here. So it's going to be a short, save. Looked for I targeted this because that was the swing high. So that was why I did that. So we got our entry and a nice quick win. That's what we like to see. So I think I only wanted to show you guys a couple weeks of this strategy. So we'll go ahead and kind of exit out of this. I'm going to show you guys what the analytics looks. Or I might need to back out of this just so it saves. But if you click on it and go to analytics, you'll see kind of the really cool dashboard that FX Replay has. So from this trade example we saw, we had an 80% win rate, only 5 trades. So obviously you would want to test this over a bigger sample size and ideally in different market conditions. Like don't take this, very simple backtest as like this strategy is awesome. It's always going to be profitable. But obviously in the time we tested, we got a nice result from this. And a few other things I wanted to show you guys here. So average risk to reward, obviously we're pretty much doing 2R for pretty much all these trades, so it makes sense the average was here. This ideal is kind of like misleading, but it's basically like if you would have held all these trades to the max potential profit within the week, like what would it have been? I don't really care about this one as much. It's more this first one and this last one. So there were no trades in this case, so this could have profited or break even. It basically tells you like how many trades went above, I believe the threshold's 1.2 R and then reverted back to a loss. And you really don't want to see a high number of these relative to how many trades you tested, because it's, I guess if you see a lot of these that kind of came back on you, it might tell you that your take profit is a little too aggressive. Like maybe you're going for like 10R trades or something, and you have a lot of trades that come back to losses before hitting your aggressive take profit. So if you have a lot of trades that you could have profited or break even, it might mean your take profit's a little too aggressive. And then a bunch of other kind of advanced analytics they have. They've got average trade time, your total winners versus total losers, your best win versus your worst loss, and obviously we were only risking kind of 1% on the account. Your best win streak and loss streak. It actually does have the buys and sells in here, so you don't have to add those tags, but it tells you kind of how many there were and then what were the win rates for each of them. So looks like buys we had 100% win rate and sells were 50%, so it kind of helps show you if maybe shorts or longs are better for the strategy you're trading. It'll show you kind of this is awesome, like they've just added this stuff. This is really great. So it shows you kind of performance by hour. So maybe if you're testing the strategy over a long period of time, and maybe you notice like certain hours typically don't do as well, maybe you want to not trade during those times. And then you've got performance by day as well. So again, over a larger sample size, maybe you'll kind of see that maybe for whatever reason Fridays are bad or Mondays are bad, or obviously weekends if you're trading crypto they might be less because there's usually less volume. And then finally just kind of performance by month. So a lot of really cool stuff. The risk to reward by day that you can see in here, and you don't need to worry about this one. It's if you're trading the different sessions, and then you can do a a cool Monte Carlo simulation to kind of simulate your biggest, drawdown, your kind of best versus worst case kind of performance. So a lot of really awesome stuff here. This is why FX Replay is so awesome, because it only took me maybe 15 minutes to do that little back test, and then I get all this data that I can really analyze. What's the win rate for my strategy? What's the average win to loss? How many trades is it usually per month or week? So this is kind of overview of FX Replay. And then I actually wanted to show you guys a kind of manual option that I kind of came up with as well. Let me move this tab a little bit. So obviously for a lot of you that trade crypto, there's only 6 pairs in FX Replay for crypto, and if you trade smaller cap altcoins or meme coins, you don't really have, at least as of yet, a similar software for them. So I wanted to give you guys kind of a manual alternative, and I basically built this kind of custom Google Sheet that I linked in the presentation that you guys can access if you want, and it requires more like manual inputs, but it gives you a lot of the same insights. So you can, for example, put in kind of whatever your account size you want, how much you want to risk for the trade, what time your trades are starting versus ending. So everything that's highlighted, you basically need to do the inputs, and everything that's not highlighted is just automatically calculated. What pair are you trading? So I have a few trades with the recent meme coin Mother, Iggy Azalea's coin. I want to show you guys, and then if there's a specific trade idea, you can this is kind of similar to the tags in FX Replay. You can kind of put what the trade idea was, and then over here is going to be your entry, or stop loss, or take profits, and then you kind of tell if it was a win or a loss. And then I also, since a lot of these meme coins specifically, maybe you'll trade them like with Solana or something, or Ethereum. So I put in an input here. You can kind of tell it what underlying coin you're trading off of. So is this a Sol-based coin or Ethereum, or I think Ton is starting to get some traction now. So, and then you need to put in the price of Solana at that time or Ethereum at that time, and it'll actually tell you, say you only want to risk, in this case 5% of $1,000 is $50. So say you only want to risk $50 per trade, it'll tell you like how many coins you would need to buy for that trade, or how much Solana you would need to buy like of that coin for kind of the risk that you're deciding. And then I have kind of, you could do compound or fixed. Like some people only want, it's easier if you just risk $50 per trade consistently, but some people prefer compounding that over time. So as your account grows, maybe you'll still stick with the 5% risk, but you'll kind of compound it over time. So I have some options in here, and I might actually add a little kind of filter up top that'll let you filter by like fixed or compound to make it a little easier. And then finally, the last 2 things over here is like a drawdown column and a comment. So whenever you have losses, you can just kind of add up what's the drawdown. So in this case, we've only had kind of 1 loss in a row. So our worst drawdown was just -1R in this case, like because we immediately made it back with the next trade. But if you had a series of maybe 3 losses, you would want to kind of summarize the 3 losses to be -3, and like up here I'm basically capturing the max drawdown that you experience from the trading strategy. So yeah, we'll show you kind of like what I mean like from these inputs. So I have another like very simple trading strategy that I was just going to show you guys. So obviously with meme coins, you're doing long only strategies, and so Mother, I was just showing you guys, I think I put it in here. So 1 hour time frame, we're just gonna long on the 3rd hit of the trend line, kind of same time frame as we were for Bitcoin. We're only gonna trade established, I guess, quote unquote meme coins over 5 million market cap. Stop loss just under the recent low, and we're just gonna a fixed 5R take profit to keep it simple. So we'll kind of see in this chart. So I have actually a couple trades here that I've outlined that were 3rd hits of trend line. But they were outside of our time. Like, we're only testing 8 to 1 Eastern. Let me change this to Eastern real quick. Sorry, give me a sec. New York. So yeah, this is like basically overnight. So we weren't going to take either of these trades. So the first actual trade from the strategy is right here. So you have you can kind of see from this low, you got 1, 2, 3. So this is our third hit for this trade. And so we're going to enter on the kind of retest. We're going to put the stop loss under the previous low. I guess to the left of the entry, basically where the closest low was. This one got really close to stopping out, but it didn't. And then 5-to-1 risk to reward. So again, you can use the go into the settings here, and you can turn on the price labels things or not to get these specific levels. But I've entered them kind of already in the chart, so you can see. We don't have to take all the time to put them in. And then if you don't want that clogging up your chart, you can turn that off. But this is a win, example that we saw. It got close to stopping out, but then ran to our profit target. And then I believe the next one was right here. So again, from this down point 1, 2, 3, we've got a trade up here, and this one was a loss. So kind of same idea. The entry, my lines have shifted a tiny bit, but the entry was kind of at the third hit of the trend line. Your stop loss kind of under this recent low in 5R, and so this one was a loss. So we had one win, one loss. And then the next trade was kind of a longer one, but from this low down here, 1, 2, 3. So third hit of the trend line. We're gonna enter at the test. We're gonna put the stop loss below the recent low, and then target 5R. So another win. And a couple more examples that, looks like we had a win here and a loss here. But this is just like showing you a manual alternative that you can go through charts on Deck Screener or TradingView or any other kind of database that you have access to for charting, and you can do more manual backtesting with a trading strategy. And obviously, again, like even though this Mother had a really nice run, it was kind of up only for a while, so it had a pretty consistent performance here. I mean, I think on this analytics page, it was 60% win rate, and I think the account went up. If you were doing the fixed, if you were doing fixed, your account was up like 80% in a few trades, from the basically, in less than a week. So this was like a really awesome performance period, but a lot of meme coins don't continue, so maybe their win rate wouldn't be as good. But again, I would recommend testing multiple coins, bigger sample size, maybe 50 sample size or something like this, to see if this strategy is in fact an edge that you want to trade over the long period. And so those are really kind of the backtesting demos I wanted to show you guys. And again, I just showed you a very small sample sizes for reference, but I definitely recommend doing larger sample sizes. I think I mentioned at least 50 trade sample size. I think is a good minimum for a backtest. And ultimately, when you have larger sample sizes, this is I think my backtest from the US 30 that I did over 4 years. So it's a 4-year backtest, over 200 trades. But a few things you definitely want to see, a slowly increasing equity curve. You don't want to see huge upswings and downswings. You want to see very consistent growth to the account. Obviously, over 50% win rate and over 2R risk to reward should be super solid. And then, like I mentioned, that could have profit or break even. Out of 200 trades, there was only 8 that got over 1.2R and then came to a loss. So this basically tells me I don't need to do any trade management with this strategy. After I enter, I'll just kind of let it hit my take profit or stop loss, because there's no reason to mess with it if most of them are either win or loss, and I'll just kind of accept that outcome. So the last thing I wanted to wrap up with is kind of giving you guys a bunch of different trade ideas that you can kind of look to play for and try to find your own edges. So I have a lot of different things in here. These are kind of from watching a bunch of videos myself and learning from others. These are a bunch of strategies that I have come up with that I think you could use as starting points for your backtesting. So I did a trading education video a couple years ago that I mentioned range, reclaim, and breakouts, as well as trading pattern trades with channels and wedges. You can kind of watch in that video. There's this 15-minute pattern strategy that I developed specifically for gold, the S&P, and the Dow. So if you trade early New York session or are able to, and if you're good at pattern recognition, you could do this one. I will say it is a little more complicated than some of the other strategies. So if you are new, I wouldn't really recommend this one. It's more if you're really good at pattern recognition and understand trading a little bit first. So some of these other ones are a little simpler. So RecProof also does these range reclaims. So he has I think a tweet where he kind of goes over that. Obviously, the fair value gap trades in line with the trend. Like I said, for the Bitcoin example, that could be something you test. I actually recently came across this silver bullet variation from this guy Blue Edge, and he says it can work on pretty much any major forex pair indices. So if this could be something you want to try. Casper SMC has this OTE strategy that I think is probably one of the simplest strategies I have on here. So if you're new, like, this might be a really good one for you to start with. He said the only, I guess, caveat is it looks like it's primarily for forex. Maybe it works on other things too, but if you are trading futures and you're from the U.S., you can't really trade forex. You're stuck with indices or gold. Maybe it works on gold, so you could at least try that potentially. And he also has a video of him backtesting the strategy that you can see. I think, this Blue Edge one, this video is him backtesting as well, so that's really helpful. There's several other examples here, a couple more from Casper SMC. I will just briefly say this strategy from ARA is a 4-hour and 15-minute combined strategy, and it's really good for part-time traders if you want to do your charting like once a week and then just set alerts when price gets like near interesting levels. This could be a good one for part-time traders, and if you want to chart like a few different coins instead of just one. And then TraderMain has kind of just some general ICT smart running concepts, kind of how price moves between internal and external liquidity. Specifically for meme coins or crypto, if you're looking at long only strategies, I just wanted to share a few kind of ideas with this. So you could obviously like filter. So the mother example, I was only trading 5 million plus market cap coins. So you can filter on certain market cap thresholds or ranges of market caps. Definitely recommend using like the safety parameters they have. You can filter on liquidity locked top holders. Make sure there's not top holders that have like tons of money. Make sure the smart contract doesn't allow like new changes or mints, things like that. You can do a bunch of filters to kind of screen for coins that you might be interested in trading. And then for some ideas, obviously there's the third hit trend line I showed with Mother. You could look for falling wedges. They break out and retest. So you can kind of look for those trades. Bullish range reclaim. So I have videos on these, but just kind of show you guys a couple visuals. So I think this is a recent example on this coin Billy that launched, and so we had a range high, range low here that established this range on the 15 minutes. We had a deviation below the low, came back above it, and upon the kind of retest, this is a range reclaim entry. And in this example, I just used the kind of low of the move, and your first target on these is really the kind of midpoint of the range, and second target is the range high. So this is a kind of recent example of a range reclaim. And then a range breakout. So again, kind of you have a high here, a low here, establishing this range, and you can kind of see we broke up out of this range, and you could try a range reclaim on the retest, a range breakout on the retest, assuming that this level basically flipped from resistance to support, and kind of go up from there. So that's kind of ranging market setups, and I have there's more resources on those. You could kind of do something like I did with that Bitcoin one, but specifically look for like a recent market structure shift. So maybe you're in a downtrend and then you get that first higher high, and then look for a fair value gap retrace, kind of assuming that it's now going to impulse to the upside. That could be a potential idea. And then just a couple other tips. It seems like a lot of people use market caps for take profits on meme coins. So if you kind of keep up with what what market cap have kind of similar coins gotten to recently, it might give you an idea kind of what levels. But it's a lot of like psychological levels. Like a lot of people will take profits at $1 million or $5 million or $10 million, etc. I think 200 million is a kind of recurring price for, it's kind of the peak a lot of coins are getting to right now. So you can consider using those for some take profits, and then you could also consider using like a trailing stop. So instead of having a fixed take profit, if you want to just keep riding it up, as long as it's, continuing to make higher lows and higher highs, then just kind of keep riding it up and move up your stop loss to each of the recent higher lows. It could be a good strategy that you can capture a lot more upside if it just keeps going up. You never know how far it'll go, and then you can protect those profits by, as soon as it shifts market structure, that's when you exit. So yeah, I hope this video was helpful for you guys. I really wanted to share a lot of specific information on backtesting. If you have any questions, you can find me on Discord or Twitter. But I really hope this video was helpful for you guys, and that backtesting can be as transformative to your trading as it was for me. It was definitely very important in me going from a boom and bust trader to being more consistent. So hope you guys enjoyed it, and I'll catch you later.